Hey, good morning, everybody. Welcome to September 23rd, Hump Day, Wednesday, halfway through the final full week of September. Hey, yesterday we had a nice little change of pace with the markets trending upward for a lot of the day. So we kind of enjoyed that yesterday. I'm thankful you're here with us today as we get ready to talk to Dave. We're getting towards the end of earnings season, so there's not a lot of stuff out there, but we do have a few earnings come out yesterday after the market closed. And we got a few pieces of tidbits that hit after you and we talked yesterday. So, hey, I'm hoping you'll hang tight as we talk with Dave here in just a minute. Remember, if you don't know how much risk you have in your portfolio, it's very important that you get a financial x-ray of your current portfolio. Give us a call to schedule that at 863-382-0037. That's 863-382-0037. Dave will be with us here next up.
Hi there. We were having some fun, so consequently, I was only halfway here. It's 8:40 now. I'll tell you why we were giggling in a couple of seconds after I introduced Phillip Statler, who's here to tell us what's going on the market this morning, what's happening with your IRA and 401k. Phillip, good morning. Did I give you a chance to catch your breath?
Yeah, man, you did, buddy. It was a fast, hey, shift it in gear, let's go this morning.
I looked up, oh my God, 3 seconds left of the record. We were laughing at Elon Musk primarily because, Elon Musk, the guy that runs Tesla, ran Battery Day yesterday. He was staging it up just like one of those big Apple pronouncements where everybody goes, oh, wow, and goes crazy afterwards. It debuted a whole bunch of new battery technology that's supposed to be much higher capacity, much lower weight, get everybody excited. In the process of the presentation, he said this stuff is almost ready to go to market. It's going to be about 3 years, to which Tesla investors said, what? And sold 6% of the stock's value off. The boy just ain't quite up to Steve Jobs' level yet, is he?
Well, if he had modeled it after Apple, he might have been okay, right? Because Apple comes in September, they do their Apple Day, and that technology is available usually within the next month or two. And so I think that's probably what people expected for him to do is that, hey, if we're going to have Battery Day, he must have something that's going to be available between now and the end of the year. And that just didn't happen. So he disappointed a lot of people.
Evidently, I'm kind of a techno geek, so I was paying some attention to that. And when he said that, yeah, it's going to be ready in about 3 years, I could just say, oh, geez, this guy really doesn't have the act down pat quite yet, does he?
Nah, but he wants to be.
He sure is trying. That was what we were giggling about and why we were cutting it close, setting the table for the morning. Maybe Kramer had a point yesterday when he said the sell-off is over because we kind of turned the corner. Dow was up 140 points. NASDAQ was up by 185.5. Standard & Poor's was up by 34.5 yesterday. Boy, you can't tell. We really went through some travails over the last week looking at yesterday in a bubble, can you?
Well, no, you can't, but that's why we had that increase is because we've had so many down days that we're finally getting some bounces off of those lows.
Yeah, that really is it. But it was interesting about the time Kramer gets up and we got a giggle off of him yesterday. We end up with a green day in the process. And point well taken. I mean, we really tanked over the last couple of weeks, and about darn time we got a bounce. Start the day off with some history from yesterday. Existing home sales was a report that we talked about in the morning and came out later on in the day. Existing home sales and the increase in home sales month to month, both basically on target, 6 million existing home sales and a 2.4% increase. But everybody got really excited in some year-over-year figures, didn't they?
They did, and not so much in the new home sales category or the used home sales category, but in the mortgage demand category. So mortgage demand for home buyers, not refinancing, but for home buyers was up like 25% from a year ago. Now, not month over month, but from a year ago, up 25%. Now, that's a pretty big number, Dave.
Especially when you do it on sales and not just refinancing. A lot of us are looking at taking advantage of the lower rates and refinancing. That's just moving money around. But somebody actually buying a home, when that demand number goes up, that is enough to get a person excited.
Yeah, it is. It does mean that the home buying is continuing on. People are continuing to buy homes and switch residences and those type of things. So that's still a good sign for our economy.
Absolutely. The other report that came out this morning kind of follows off on that. The mortgage market index. I'm not sure how that's calculated, but it's an up number. It went from 757 last month up to 808.5 this month, again showing good signs as far as activity in the home buying market, which, as you and I have always said, a new home generates a whole pile of jobs, so that's always good news.
Yeah, it does. You're right. That's one of those things that we like to see because it does continue to help the economy. Now, the number that came out yesterday was existing home sales. Tomorrow we get new home sales. So so we'll have to take a look and see how well. You and I won't talk about it tomorrow. We'll talk about it on Friday.
Yeah, and actually, I'm kind of thinking if existing home sales were basically on target, the mortgage demand index is up. That kind of means there's only so many places you can have new indexes in, new home sales. That probably indicates a pretty good increase in new home sales, and we should be expecting something good there, wouldn't you think?
I would think so because if the existing home sales came in line, you're right. So that means hey, inventory at least here in our area is somewhat down. So if people can't find what they want, what are they going to do? They're going to go to the new home market and find something new or build something new.
And that's where we end up generating jobs and going yippee yahoo, because that's good news. Turning the corner, there's some bad news out of Europe to be had today because they're showing basically a shutdown over in England. Boris Johnson was on the news this morning saying that things are increasing geometrically in terms of cases, so he wants to shut down Great Britain again. Seeing a lot of economic reports showing that the recovery is kind of stuttering over in Europe. That doesn't make our investors very happy, does it?
I'm sure it doesn't. I missed that. I didn't see that anywhere on my tip sheets, that report. But I'm sure that any time that we start seeing a slowdown or a close down of European countries, that's going to be an issue because it's kind of like the flu. As it comes this way, is that one of the things in the back of investors' heads that could be coming our way?
Yeah, it jumped the pond once. It can jump the pond again. So it always gives us reason for pause at the very least when a major trading partner gets a skid in their economic numbers. Speaking of economic numbers, we had at least one really, really surprising report yesterday, didn't we?
Yeah, we had a couple companies actually reported, but the best news we had was Nike. Nike actually did 100% better than expected. They came in at 95 cents a share. The revenue beat forecast, and get this, online sales were up 82%. So really and truly a good quarter for them. And you can see it in the stock price this morning. They're trading up a little over 12%, and they will open at a new 52-week high this morning.
Now, we see anybody with a $131 share price going up 12%. That's impressive on its face, and there was good reason for it, wasn't there?
Yeah, there was. They really did come out and beat the market.
I noticed that even that's helping its competitors. Under Armour, the other upscale sportswear apparel company, they're kind of getting dragged along. They're up 3.5% this morning as well. That's mostly sector excitement because Under Armour's had some troubles lately.
Yeah, they have. So I'm sure that's the sector really kind of playing in there in terms of just that sector getting a bounce off of that. Then we had Lululemon. They're getting a big bounce today too because they have reinstituted their stock buyback program. So they have about $263 million still in that program to spend and buy back shares of stock between now and January 31st.
Not bad. You said there was another company that reported
that was. We actually have a couple, Dave. We got some household names. General Mills reported. They earned $1 a share, which was 13 cents ahead of estimates. Revenue beat forecast. Obviously, their at-home packaged foods are doing well because of the whole COVID thing, and they're trading up about 1.4%. We had KB Homes talking about contractors and new home sales coming up. They beat by 30 cents a share.
Cool.
Yeah, and revenue came in above forecast. Now they I didn't see anything negative in the tidbits I have, but they are trading down this morning. So there must be something in there somewhere that's not getting leaked out of to the news press. But they're down 1.7%. And it could be that they're just bumping their heads up against their 52-week high this morning.
And one bad word in the guidance numbers could do that to a company. We had one exception yesterday that gave neutral to down guidance and still went up. But for the most part, somebody says we don't know for sure about the future. That has a tendency to cost a company even when they do well, doesn't it?
Yeah, it does. And we had one miss. We had Stitch Fix. That's the I don't know, you call them home shopping type thing. They send it to you. You try it on. If you like it, you keep it and pay for it. If you don't, you send it back to them. They lost 44 cents a share. That was 16 cents more than expected. Their revenue did beat, though. They had about a 9% increase in active clients compared to a year ago. But they're trading down pretty substantially today, down 15% this morning.
Somebody's not returning their clothes.
Yeah, I guess that could be the problem.
Could be it. Resetting the table this morning. Up day yesterday on Wall Street. Like we said, mostly bounced off the lows to most of our suspicions. 45 minutes early. How are we looking so far this morning, Phillip?
It's a little bit of a mixed bag today, Dave. We got the Dow and the S&P moving up. The Dow up 0.6%. The S&P 500 up almost 0.2%. And we've got the NASDAQ down about 0.2% right now. And it's fluctuated between green and red all morning. Looking at the commodity side, due to the increased value of the dollar, we're seeing silver and gold get hit pretty hard this morning. Silver's actually down over 4.5%, down to $23.39 an ounce. Gold is doing a little bit better than that, down 1.3%, still down below $1,900, down to $1,881 an ounce. And crude oil is up 1/3% to $39.94, a little bit better than what it was yesterday.
Just a little bit, at least staying in the neighborhood. I'd like to see it about $1 or so higher in order to get us back to opening up the oil fields in Texas. Overseas markets, Asia wasn't very excited by anything. Everything was mixed in Asia, but just a tinge either side of the zero mark. Britain must be happy because Boris is keeping the bars open at 25% capacity because they're up by almost 2% after really taking a bath earlier in the week. Germany is also up fractionally this morning, halfway through their day. Phillip, it's one of those times where if the closer you get to retirement, the more the stuff we talk about can scare you if you don't know how much risk there is in a portfolio. How do I find you to identify that risk?
Hey, they can give us a call at 863-382-0037 to schedule their financial x-ray to determine how much risk they have in their portfolio and to make sure it really aligns with their risk number. Follow us on Facebook, Statler Financial Services, like our page there, and then join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk 730.
All righty. Back here again tomorrow morning. Phillip, thank you so much. We'll catch you then, all right?
All right, man. You have a great day.
Thank you much. It's 105.7 Light FM and Statler Financial Services. Phillip Statler.
Hey, everybody, I want to thank you for joining us today. Remember, hey, this market has a lot of volatility. We got the election coming up. That's going to cause even more volatility. Make sure that you know what your risk number is between 1 and 100, and make sure your portfolio really does line up with your propensity to handle risk. Give us a call. Let us help you through that process with our financial x-ray. The number is 863-382-0037. Again, 863-382-0037. Hey, guys, have a great day. I look forward to speaking to you again tomorrow.